Hello traders, the title of the video is talking about currency correlation trading tactics. Alright, so do you trade currency? Did you trade Forex? Do you trade FS? Are you in the FS market? Do you want to use practical currency correlation trading tactics? Alright, now we are recording this video today because a YouTuber subscriber has asked me exactly to record this video about currency correlation. In fact, I have already done it at the George Trio YouTube channel. But the reason why I'm recording it one more time is because I want to add new things that can help FX traders to master currency correlation trading. It's quite simple. So when we are talking about correlation, we are talking about relationship, all right? The influence of one currency on the other, how do we compare one currency to the other? So we are talking about if one currency pair is going up, all right, what are the other currency pair that are following suit? So in this case, we are talking about leadership. A group of currencies, all right, currency pair are following another currency pair. So when we are talking about currency correlation, we are talking about leadership, all right. We are also talking about divergence and convergence, all right. So currencies are converging, doing almost the same thing. I'm using my word carefully here. Almost, not guarantee, almost the same thing. Most of the time, this is another word I'm using carefully, almost the same thing, and most of the time, but not always, all right, this is about converging, doing almost the same thing, most of the time. Some currency pair are doing the opposite of another leading currency pair most of the time, all right, and this is what we want to use, how can we use that to make a practical day trading, swing trading, position trading in the Forex market? Now, but before we continue, because a new trader may get carried a little bit away with this topic, I need to warn traders that there is something else that has changed, all right? The currency correlation trading, all right? Over the year, it was very simple to use a currency correlation, to make excellent decision in the currency market. But over the year, that strategy has changed, all right? So what has happened is that we are talking about hedging activities. So normally, for instance, when the euro dollar is going up, this is the number one example, all right, because it's a leading currency pair. So remember what I said, correlation, we are talking about leadership. So the euro dollar is the leading currency pair. So other currency are following the euro. So when the euro is going up, all right, the dollar Swiss franc, USD CHF, dollar Swiss franc will be going down. So this is the number one. So this is what professionals usually paying attention to, because that correlation between the euro dollar and the dollar Swiss franc, it works more successfully than any other correlation. Euro goes up, dollar Swiss franc goes down. Euro goes down, all right, dollar Swiss franc goes up. It happens very often. So I want to show you now, but don't get carried away because of the hedging activity in the financial market. So what I was saying to you, that over the year, that strategy has changed a bit. So suppose you are a hedge fund manager, you are an investment bank, and you want to buy the euro, all right. So you buy the euro with millions of dollars, you take position in the euro, but now you know that, all right, if the euro goes down, you lose because you are buying, expecting to go up. But if the euro goes down, you lose. So what people usually do, they buy the euro and then they will buy the dollar Swiss franc. But normally, we know that this is hedging activity. We know that normally, if we buy the euro is going up, we should be selling the dollar Swiss franc, yes or no? Because the dollar Swiss franc will do the opposite of the euro dollar. But because we want to control the risk that we are taking, we buy the euro and we buy again the dollar Swiss franc. So what we are trying to do is that we want to win in all cases. So it's like taking, the opposite position for the same financial instrument. Is illegal. So you can't buy the euro and sell the euro on the same account. Do you know that? You can't do that. You can only take one direction and then close that position because selling again. So instead of, so to go around that rule, we buy the euro and we buy the dollar Swiss franc. So what we are doing, in fact, we are like saying we buy the euro and we are selling the euro at the same time. Why? Because by buying a dollar Swiss franc, okay, we are saying that the euro will go down. All right, you understand? Because they are negatively correlated. So we are buying a dollar Swiss franc, so we are saying that the euro dollar will go down. But at the same time, we are buying the euro dollar. So because of those hedging activity in the financial market, the strategy of using currency correlation is not working 100% all the time because of the correlation. So like every other trading strategy or investing strategy, the market is changing, is becoming very, very sophisticated. So old way of trading, all the trading mindset are changing all the time, and we are adopting new mindset. There are new players in the market, a lot of hedge funds, big financial institutions protecting their position by taking, okay, the other side of the trade, or by protecting themselves, making, okay, the correlation, okay, less reliable. So now we are looking now at the euro dollar currency pair on the monthly chart. So you can see here, this is the month of September. This candlestick bar here is the month of September. This is the month of October. Those two candlestick bars are now closed. This is the new month of November. So pay attention to that. This is the euro dollar. So talking about currency correlation, what would you expect when we switch to the dollar Swiss franc? We'll expect the dollar Swiss franc to go up because they are negatively correlated. Euro goes down, dollar Swiss franc should go up. So we will be checking now. If I switch to the dollar Swiss franc, we'll expect the month of September and the month of October for the dollar Swiss franc to be up. Let's go and see whether this is true or not. All right. Dollar Swiss franc, here we are, it's coming out. This is the dollar Swiss franc. So this is this candlestick bar here. This is the month of September, and this is the month of October. So here the correlation was verified. So that's what I'm saying to you when we are talking about currency correlation. The number one play in the Forex market is the euro dollar and the dollar Swiss franc. So those sometimes some Forex trader that got a deep pocket, I don't know. If you are a new trader, don't play this anyhow. Be careful. You work on it first, master it before you go around doing that. Because some traders that have mastered the currency correlation trading will buy the euro dollar, and at the same time they will sell the dollar Swiss franc. All right, and I will be explaining that to you what you need to look for when you are doing that. All right. So here it is. The correlation was verified. It's a negative correlation. When one currency pair is going up, another one is going down. So because the dollar Swiss franc is going up, professionals are selling the euro dollar. But I understand that it's not all about the chart that you are looking at on the monthly chart or any time frame. It's more to do with policy. Now I want to talk about the central bank. Okay. The U.S. Federal Reserve policy, all right, they have been putting up their interest rate before everybody else, all right, okay, so boosting the U.S. dollar. So U.S. dollar was benefiting from that, all right. Now, if the market is not expecting them to continue with that policy for now, for the short term or for the medium term, the dollar will start going down. The dollar will become a little bit bearish, all right. On the other hand, people were thinking that, okay, the ECB will continue with their quantitative easing policy, all right, devaluing the euro. In that case, they will be selling the euro against other currencies, all right? But as I said to you before, due to the hedging activity, this kind of a correlation sometimes does not work, okay? So talking about currency pair that are positively correlated to the euro dollar leadership. Euro is the leading currency pair. So there are other currency pair that will move in the same direction like the euro dollar. So I will tell you very fast the most important. I will not talk about everything else. One example is that the Australian dollar, US dollar, positively correlated to the euro dollar. Another one, the British pound, Japanese yen, the British pound, US dollar, the New Zealand dollar, US dollar, the Australian dollar Swiss franc currency pair. Now, I need to explain to trader that the Australian dollar Swiss franc currency pair is quite faithful to the euro. Sometimes it will go in the other direction, but watch it. It will turn around and follow the euro. It may do something else during the Asian session or during another market, but slowly he will come back and catch up with the euro. So, euro dollar, okay, currency pair positively correlated to the Australian dollar US dollar, pound dollar yen, pound US dollar, New Zealand dollar, US dollar, Australian dollar, Swiss franc currency pair. Those are the most important currency pair that I want to talk about. I will not go over euro. So one thing you need to understand, every currency pair that is starting with the euro, like euro New Zealand dollar, euro Swedish krona, euro Turkish lira, anything starting with the euro will be positively correlated to the euro dollar. All right? That's the first thing you need to understand. Anything starting with the euro will be positively correlated to the euro dollar, but the most important currency pair that you want to play with is the Australian dollar US dollar, the pound yen, the pound US dollar, the New Zealand dollar US dollar, the Australian dollar Swiss franc currency pair. But one warning, the euro British pound, you need to be careful if you want to play with the correlation, because there is a lot of hedging activity with the euro British pound. So instead of buying the euro dollar and buying at the same time the euro British pound, the hedge fund and the big financial institution will buy, for instance, the euro dollar and will sell the euro British pound. So this is what I'm talking about. So the correlation is true, positive. There's a positive correlation between the euro dollar and the British pound, but due to hedging activity, sometime you may see that those correlations may change. All right. But so you have to understand that when we are talking about currency correlation, we are talking about also for different worlds. So the United States, the dollar against the European, the euro. So we may say that the euro is competing with the US dollar. So we may classify, I'm using my word carefully, don't bang me for that. We may classify currency starting with the US dollar as negatively correlated to the euro dollar. That's not true in reality. That's not true in reality. The number one play, talking about negative correlation, is the euro dollar and the US dollar Swiss franc currency pair. So don't go around playing with the euro, the currency correlation anywhere. How? Stay to the key, right? The one that professionals are using, euro, dollar, negatively correlated to the US Swiss franc. People are playing that. So don't do something else. Euro dollar, positively correlated to the Australian dollar, US dollar, pound yen, pound US dollar, New Zealand dollar, US dollar, Australian dollar, Swiss franc. Those are the number one play. So don't go around do something else. Another currency pair that we may consider negatively correlated to the US dollar is the US yen. But be careful, again, hedging activity and all kind of blah, blah, blah. So in order to perfect, so that now I'm talking seriously now about what you need to do, what you need to pay attention to, there are short-term trading decision, medium-term trading decision, long-term trading decision. So when you want to play with the currency correlation, I think it's better to adopt long-term view. Talking about the policy by the Federal Reserve, check the economy news at the Forex Factory. So if I show you now the dollar yen, all right, here it is, the dollar yen. This is about the policy. So at the beginning of 2012, the Federal Reserve said that, we will stop quantitative easing, we will stop devaluing the dollar, and the market responded and started buying, the dollar against other currency, especially they were buying the dollar against the yen before the Federal Reserve even start, putting up interest rate. So the dollar was already up before they start making a decision. After that, they start going down. So pay attention to the market sentiment. The Federal Reserve will start giving warning. It's like in England, so pay attention carefully. Here is another one I want to mention to you now. So recently, there were a lot of talk that in London, United Kingdom, the Bank of England will put up interest rate. This discussion was going on for some time. So you hear first the rumors, Am I speaking with my beautiful American accent? People will be talking about it first. So the policy is very important. So is expected today, all right? The Bank of England will start putting up interest rates. What does it mean to us? It means that the pound should appreciate against many currencies, all right? So the long-term view for the British pound against the dollar is bullish. But I have a warning for you. Because we are talking about United Kingdom, there's something else that the market is worrying about, is what we call the Brexit. The fact that the United Kingdom is coming out of the Eurozone is also having a negative effect on the British pound. Though talking about the policy by the Bank of England is bullish for the British pound, the Brexit is having a negative effect on the British pound. So therefore, we will have a little bit of a mild bullish progression for the British pound against other currency. So pay attention to those. So when you see a conflicting policy, usually it's not conflicting most of the time. For instance, the Federal Reserve start putting up interest rate first. So you see boom, 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 and then they will pause. They will stop it for a while, allowing, for instance, the British government, all right, the Bank of England, to start putting up interest rate. So there is something going on now. It's the globalization of the world. Decisions are not made anyhow anymore. There are consultations going on. So you watch out for that. So Federal Reserve start first, and now the Bank of England will start, and probably the ECB will start later. So those are the things you need to pay attention to, talking about currency correlation. So you want to pay attention to those policies and say, when are they pausing? When they are pausing, it means that we're going to see a change in the direction. So the expectation for the British pound is up. So we're expecting the dollar to pull back a bit, and so on and so on. All right? Talking about technical trading, what can we look for? Look for chart pattern. So you may see sometime, all right, like the British pound or the euro dollar may exhibit a bearish chart pattern. At the same time, the US dollar Swiss franc will exhibit, a bullish chart pattern. So euro exhibiting a bearish chart pattern. Now we look at the dollar Swiss franc, yes, it's exhibiting a bullish chart pattern. Now the correlation is clear that it's negative correlation. One bullish chart pattern here, one bearish chart pattern here. We want to play that. That's one way. As always, don't just jump on it, all right? Use a top-down trading method. Be gentle. Because sometimes, though the currency may be negatively correlated, sometimes they go up together. You'll be surprised. Euro dollar going up, dollar Swiss franc also going up. You wonder, whoa, George, what's this correlation about? Sometimes it does happen, all right? But look for chart pattern. So, for instance, the euro dollar, a British pound, US dollar, are positively correlated. Now, euro dollar exhibit a bullish chart pattern. British pound US dollar also exhibit a bullish chart pattern at a key level. Well, we will trade it. The chart is saying that, it's a bullish chart pattern. We know that there is a positive correlation. We don't want to just buy. We be careful. Always there is a risk. Use different time frame trading method to trade it. Or euro dollar exhibit a bearish chart pattern. Dollar Swiss franc exhibit, a bullish chart pattern, negative correlation. We want to play. So look for chart pattern and see whether there is a convergence between the chart pattern or divergence between the chart pattern, talking about positive correlation or negative correlation. All right. So also be aware of the Elliott wave pattern. So traders who are following us at 24 Elliott Waves YouTube channel can also look for Elliott wave pattern. So which pattern is the euro exhibiting? All right. Is the euro in a corrective phase? Is the correction finished? Good. If the correction is finished, we expect an impulse wave, yes or no? So look for those. So euro is about to start an impulse wave, where we will be expecting, the dollar Swiss franc to do also an impulse wave, but in the opposite direction. So when the euro is for instance exhibiting a correction, all right, we will be looking at the dollar Swiss franc expecting again a correction. But one will be correcting an impulse wave, a bullish impulse wave, another will be correcting a bearish impulse wave, expecting the continuation and so on. So try to play with it with more experience. So what I'm saying here, attention to the central bank policy, all right? attention to the chart pattern, all right? Market pattern, rising channel, declining channel. So euro is coming out of a bullish chart. Here it is, British pound coming out of bearish chart pattern. This is good. Check the currency that are negative correlated to the British pound, US dollar, which is the dollar Swiss franc. Is it coming out of a bullish chart pattern? So market pattern, chart pattern, area way pattern, central bank policy, all right? But most importantly, understand that the hedging activities, okay, can change the dynamics of, currency correlation trading tactics, all right? So I hope I have given you a few tips and tricks to improve your currency correlation trading tactics, all right? So as always, okay, practice first and build for yourself a solid, a robust, okay, currency correlation trading tactics, all right? So I hope, I think I've done my bit, all right? So if you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. So this will conclude our discussion today about talking about currency correlation trading tactics. If you find this video truly useful, please let us know by giving us the thumbs up. If you dislike it, do not hesitate to mark it down. It's your right. All right? If you think this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders, talking about currency correlation trading tactics. I would like to thank this trader who asked the question, and I think I will post one more video to show trader more how to deal with currency, okay, correlation trading tactics, especially as a day trader or as a swing trader or as a position trader or as an investor. So I will be posting those videos in the near future. Thank you for watching, and speak to you soon.